Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for WealthPress. Today is Tuesday. It is the 24th of August. It's actually my wife's birthday, if you want to know the truth. I'm pretty happy about that. It's a nice day. We're going to take it easy and celebrate after I have a big webinar today. But anyhow, market's going to open up in about a little less than 2 hours, about an hour and 45 minutes. I'm an early bird. I'm here in the morning early showing you the pre-market opening to see whether markets are going to open up random or not. That's the first thing I typically look at. And when I look at the indices, let me look at the U.S. markets so we can get a really good idea of how the U.S. indices are doing. And right now, as you can see here, the Nasdaq's up 45. That's not random. But for the most part, the Dow's up only 60, the Nasdaq, the S&P's up only 8. So the only thing that's really showing any type of firepower is the Nasdaq. And remember, it's at 15,000. So it's not all that much. But again, I'm expecting choppiness as we head into the GDP, which is the biggest report of the quarter. I'm getting so much Fed data's coming out, I'm getting confused. Yesterday's existing home sales came in better than expected. The PMI composite came a little bit soft, but nothing really to write home about. New home sales is what's on the docket today. The last three reports were soft, but they weren't too soft. They were just a little soft. The truth of the matter is existing home sales and new home sales are breaking records. So even if the number's a little soft, it'll be okay. And tomorrow we've got durable goods and we're getting ready for the GDP and jobless claims. Now, what you need to do is pay real close attention to the bond market. The bond market is being impacted the most by all of these reports, and then secondarily, the stock market isn't impacted. I believe the bond market is going to cool off because the economy is expanding. I think but for COVID right now, but for this Delta variant, the Fed would have already taken some action. I think the only reason why they're not slowing down their 120 billion bond buying program per month, 120 billion per month, is because of this Delta variant. And they even said it. They said it in their last minutes. So I believe as long as the GDP is firm, this bond market is going to cool off, which means higher prices for interest rates. Now, aside from this news, and again, tomorrow expect some subdued trading. Don't expect a lot of volatility, not only because we're smack end of August, like the quietest period of the year, but because typically before the GDP, big hedge funds, the ones that are not on vacation right now, mind you, they don't like to take big bets because it can have a major impact on the bond market. So keep your eye on the bond market the most. That has the biggest impact. Put the call ratio. Let me just change to the line chart. As you can see here, we're now at 78. We're no longer extremely fearful. We're now in the middle of our range, which isn't really here or there. It just means the market is not in a snapback, ultra bullish or ultra bearish environment, which is also confirmed by the VIX index, which is now not at 22, but is now moving down to pre-COVID levels. And I think we're going to hum here for a little while till the fall, where we get real volatility. Because remember, October is the most volatile month of the year. Crude oil, if things continue easing up with COVID, I think crude oil prices are going to rally again. And I'm expecting us, this is the actual crude oil contract for January. Let me go to nearby. It's easier to work with nearby. So I'm expecting the crude oil price to hit about $72 per barrel and ultimately hit the 77 before cooling off. I think we're going to have some choppiness, but I don't think we're going to stay at these levels. I think volatility is going to increase to the upside and crude oil will rally. So the stock market is stable according to the put to call ratio and according to the volatility measures. The equal weighted index is moving higher. The actual S&P should be right at new highs or near all-time highs. Yep, right there. And if you look at the Nasdaq, you will see that it's probably not all that far apart, new highs. But again, if you look at the mid caps, and I already showed you the equal weighted SPY, things are flat. So the only stocks that are showing those real strong gains are the Amazons, the Netflix, the large cap stocks. As a matter of fact, if you look at momentum levels, and I haven't done this in a while, if you look at the Nasdaq 100, you will see that Nasdaq 100, 66% of stocks are trading above the 50-day moving average. But look at the Nasdaq Composite. Only 46, and we're making new highs. Think about this, folks. There's only 57% of stocks in the Nasdaq trading above the 200-day moving average, and we're making new highs. That's disturbing. But if you look at the Nasdaq 100, that number is 76%. So 76% on the large caps versus the regular stocks, only 57%. And if you look at the broad market, stocks trading above $2, we're barely bullish. Look at this. Only 55% of stocks trading above the 200-day moving average, and only 41 above the 50-day moving average. So if you take the market capitalization away, you're going to be left with a stock market that looks a lot more like this. Let me show you. This is really what the stock market looks like right now. The overall stock market, not like this. This is sugar-coated and duped with all the large cap stocks, which are just stretching this market out and completely distorting it. Now, in light of all of this monkey business that's going on with this market, in light of the summer months, in light of the fact that volatility is not that high, as a matter of fact, let's look at how many stocks are making 90-day highs and lows. That usually gives us a good indication of momentum levels. Let's take a look here. Yeah, there's only 14 stocks breaking down and 127 breaking up. That 90-day high and lows, typically you want to see the number above 200. So it's telling us markets are choppy again. And in light of that, I've got a couple of solutions for you. First of all, you don't need to always be in the U.S. markets. The Saudi Arabia iShares, KSA, looks like it's pulling back from all-time highs. Now, I don't know about you, but there's a lot less volatility, a lot less competition. And if you look at the option prices, let me show you what the options cost here. So this is an option that expires at the end of the year. 116 days away. The asset is at $40. Look how much a 40 strike price call is. Now, granted, there's no volume on this sucker. Let's see if we can go a little further back. Yeah, very little open interest and volume. Let's see. That's the problem. There's not a lot of volume. But an at-the-money option that expires in 25 days is like, it's like a buck. A buck. I mean, that's nothing. That's nothing. So again, and you know what? Even though there's not a lot of volume, let's look at open interest. Yeah, it's about $1 spread. But I mean, look at this. Even with no open interest, right? And I mean, there's going to be open interest as we get closer to the dates. Bid is 145. The ask is 230. You could probably get it somewhere at 188. That's at the money. 116 days till expiration. That's pretty good, right? Not like Amazon where you have to pay $8,000 for an at-the-money option. So these ETFs are really good and they could save you a lot of money, and not a lot of traders are looking at them. So you still have a competitive edge. So I like this Saudi Arabia ETF a lot. It may come down to the 50-day line, maybe a little more, but I'd be buying it right around the 40-ish level. And lastly, since the market's a little hinky right now, I've got a short opportunity for you. Now look at this thing. 908 devices, mass. Look at this downtrend, and it's pulling back to the 50-day moving average. I would be selling it right now and covering my short around the $28-ish level. It's right now at the $34 level. I think this thing's going to drop. And if you look at what this company does, multi-purpose handheld desktop mass spec devices for chemical, it's down 32% this year when the market's at new highs, all right? And it's got a market cap of less than $1 billion. So it's vulnerable. Earnings per share are down. Earnings per share is down. This company is losing money, losing net income, losing money. They're not doing great right now. They're doing terrible right now. And long-term chart, I mean, look at this. Awful. And I like the fact that it's keying off the 50-day line, and I think we're going to break down on MASS. Now, before I let you go, and again, we've got the KSA Saudi Arabia ETF. So before I let you go, I've got something really, really important and possibly life-changing for you. I'm not kidding. I'm serious about this. Former Air Force pilot and multi-million-dollar investor Chuck Hughes, he's getting ready to disclose his brand new trading discovery called Omega One. He's revealing it to a select group of traders, and guess what? My viewers, you guys, are all invited. It's happening today. Not only will he reveal the pricing anomaly that recently paid him 104 times out of 108 trades, but he's going to put $3.4 million on the line to help traders succeed with this new innovative formula. Folks, click on the link below to learn how traders can unlock Chuck's Omega One trading strategy. It's happening today at 1 p.m. You do not want to miss out. Make sure to like this video. Subscribe to this channel if you're watching on YouTube. Folks, stay ahead of the market by being the first to be notified when I post new videos giving you hot ETFs like 𝗧𝗴𝗀𝗍 iShares and these nasty stocks to sell short and fade like mass. You don't want to miss out. Follow the link below. Check out 𝗎𝗏1 today. Do it now. And I'm going to be hanging out with my wife celebrating her birthday tonight. Bye, guys. Have a great day. Bye.